All right, the spinning circles here, and that means we're back on a Tuesday with another Money Moves just for you. So, welcome everybody for joining us on our YouTube channel. Thank you. If you're listening to us on one of the podcast formats, Apple, Spotify, or whatever the case may be, we are glad to have you here and get ready to pick up some learning about money and how you can make moves for you and your family. So, welcome. I'm here with the lovely Miss Wendy Lee. Hi, Wendy.
Hey, how are you?
Good, as always. Well, I'm excited about today. Why? Because we're going to be talking about 5 ways to reduce your tax bill for 2024. And I know, Wendy and I have talked about this, and I know she loves paying income tax, right, Wendy?
I dread it. No, I just dread taxes in general, but it's good to learn about them.
That's right. So, what's that song? She works hard for the money, right?
Yeah.
So do I. So do guys, right? So we're going to talk about 5 ways you can keep it, and that way you have more for you and your family to do things. So do me a favor, hit that little subscribe button down below. Give us some love, give us a like and follow on our Spotify channel or whatever, again, platform you're listening to. And we're going to get started here in just a few seconds. And we're back. So, Wendy, taxes. What do you mean you don't love paying them? The government does a great job spending our money.
Yeah.
Maybe not at all the right things. Let's put it that way. So, and that's kind of the thing. I mean, because we're going to get some people chiming in. Oh, you guys, blah, blah, blah. Look, I love my country. Not a big fan of how the government spends our money, especially when they send literally billions with a B overseas when we got enough situation we got to handle here in the United States. But this is why you want to be able to control more of your money. I don't know about you, but I know I can figure out a way, better uses of my money. Let's put it that way. So,
yeah, absolutely.
Right.
And it's,
So, go ahead.
I was going to say one thing I've learned, I used to avoid the tax conversation and avoid taxes like as much as possible in the past, but I've actually in the last, especially year, become really interested in learning more and more about how it all works, because we actually have more power than we think.
A lot more. And that's one of the things, and I'm glad you said that, Wendy. I mean, it's one of those things that you can actually control your taxes to somewhat of the same degree you can control your debt.
Mm-hmm.
And people are like scratching their head, especially if you not really expanded out, you're in that W-2 world, right? It's like, what do you mean I can control my taxes? You can. There are a lot of things you can do, and I'm not just talking about having more kids or whatever the case may be, but a lot of different things you can do to reduce your tax bill every year and keep more of that money. And when I coach families, when I coach business owners and things like that, especially those families, when you get a big tax refund, a lot of people get excited about that. That's actually a bad thing. Ideally, you want to owe $1,000 or less at the end of the year, or receive a refund of $1,000 or less. And that's kind of that swag, right? And you can control your W-2. And I just want to remind everybody, this is educational purposes only, right? We're not trying to give you specific tax advice for you. Make sure you work with a consultant or a tax advisor or a CPA or somebody like that. Or if you do it yourself, make sure you're using one of the softwares out there that are legit. But we're going to be talking about some things that you will kind of want to think about. And, one of the first ones is taking advantage of tax credits that are out there. There are a lot of different tax credits, right? We've talked about some of the stuff in the past, like for business owners, with the ERC, for you self-employed solopreneurs, there's a $32,200, I think, is the maximum money you can actually get back. If you don't know what we're talking about, make sure you reach out to us and we'll share the link with you. You can go and actually find out yourself. But looking at all the different tax credits out there's a lot of ways to get that money back. And some of it, even if you don't owe taxes, like the SETC, right, you can actually get a check back to you. Like, here's the money.
Yeah, it's pretty nice. I just totaled up the other day. I've helped people get over $500,000 back in that self-employed tax credit. So that's pretty cool.
No, it is cool. I mean, but there's a lot. You got, like the earned income tax credit, the child tax credit, which most of us know, right? If you have those little tax write-offs, We call them children. The child and dependent care credit. That's another one that's, a little bit different. So dependent care. And then lastly, this is one I didn't know. I was doing research for this show, and I came across the American Opportunity Tax Credit. I'm like, what is that? I've never heard about it. Now, oddly enough, the U.S. government doesn't advertise this stuff. You've got to go and seek it out. So, and that's why you want to work with a tax advisor, not a tax preparer. Okay, there's a difference, and we should do a whole show on that one too. We will as we get closer to April 15th. But and there's a bunch more out there. But you really taking advantage of these different tax credits that are out there, you can get more of your money back, keep more of your money, and I am confident that you can figure out what to do with your money that's going to best serve you and your family than the government, right? So that's the first one. Number two, start a business.
Yeah.
I think everybody in the United States should own a business. I don't care if it's a small solopreneur, side gig, something you love to do, and you're selling some stuff. If you love to make wood carvings or whatever the case may be, I mean, there's a lot of things you can do out there. And I know, Wendy, you know all about that stuff, not the wood carvings, but the business stuff.
Actually, my cousin has a wood carving business. So, and so I do know a little bit about that one. But yeah, starting a business, I heard somebody say this and I thought it was so powerful. Like when you're a W-2 employee and you get your salary, say you make $100,000 a year, you pay tax on $100,000. When you make $100,000 in a business and you have 50,000 in write-offs, of business expenses, you pay taxes on 50,000 instead of that 100,000. So I know I'm putting it very simple, but the power of having
that's what it takes. Yeah, that's what it takes. I mean, and that's the point. It is very simple. It's not easy, but it's very simple, which is why you need a tax advisor, not a tax preparer, right? Somebody who's used to working with business owners, because there's a lot of things you can write off in your business. And that's the thing, when you have a business, you want to keep doing the things you want to do and figure out, okay, how can I legitimately, we're not saying cheat on your taxes by any means, you can get a lot of trouble for that, but how can I legitimately write off taxes, right? If you're a real estate investor, for example, you want to take a trip to Florida, well, make sure you're going and looking at some rental properties and things like that while you're in Florida. You're not going to be doing it 24 hours a day, so you're still plenty of time for fun, things like that. You get to write off the travel, and some of the meals and stuff like that. Again, work with your tax consultant. But those are the things we're talking about. Absolutely. You have a car, is that car for business? Maybe I can write the whole thing off. Maybe. So those are the things, right? You've got office space. And I know a lot of tax, if you write off, office space in your house, you're going to get audited. Find a new tax advisor, right? Find somebody who knows what they're doing and is actually giving you good guidance and isn't afraid. Because here's the thing, if you have a tax preparer, and this is a little side note that says that to you, that should tell you they are very conservative, very conservative. They're worried more about being overly conservative than trying to teach you how to maximize your deduction, right? Yep. So, business write-offs, and that's, again, a whole show in and of itself, but there are a ton of them. And I don't care if you do this, full-time, part-time, some of the time, whatever, have a business. And it doesn't have to be something where you got to go start an LLC or anything like that. You could be a solopreneur. Okay. There's a lot of information out there in books. And as always, like right here, you can go to YouTube University and learn about that stuff. Now, again, research and set your expectations and things like that, and talk to your tax person, but figure out ways to keep more of your money. And that's number two, is start a part-time business. Number three, kind of along those same lines, is if you have a part-time business already, and maybe you've gone the solopreneur route and you're like, well, I'm starting to get involved with people, so I'm going to start an LLC. And that's great. An LLC will not save you on taxes, but it will protect you from, litigation and protect your personal assets. It separates you from your business activity. But even going a little bit beyond that and looking at an S Corp or a C Corp or an LLC with an S Corp, again, I'm not an attorney. But looking at those different things, because as an S Corp, for example, once I hit a certain point of income, my tax advisor advised me, John, you're paying too much in taxes. Like, what do you mean? And he explained to me, well, if we set up an S Corp, now you won't have to pay self-employment tax as well as, what you're paying in taxes and personal taxes. I'm like, I thought it was all the same. He's like, no, not at all. Again, you don't have to know everything, but you've got to have those people around you that can explain this stuff to you and help you out, advise you, right?
Yeah, with the S Corp, or I moved to an S Corp as well. And with that, then my salary becomes one of my businesses tax write-offs, right? So yeah, so S corp, definitely ask your tax advisor if that's right for you.
Yeah, and not to mention if you are self-employed, in like an LLC, for example, and say you're doing this full time. This is a side note. It makes it very easy or much more simple for you. You know that whole, well, I want to apply for a car loan. Well, I need a pay stub and your W-2. Well, I'm self-employed. Oh, okay. Well, we need proof that you've been in business for at least 2 years. Blah 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 blah. Here's another couple of hoops for you to jump to. As a matter of fact, that ring, let's light that ring on fire, and you jump through that, and maybe we'll approve. With an S corp, you're a W-2 employee. Boom, here it is. You may need to still provide taxes or whatnot, but if it's a simple loan or whatever, typically they just want a pay stub, and you're good to go. So there's a lot of other benefits to it as well, but it does again save you on taxes. So tax credit, start a business, upgrade your business to an S corp or a C corp, something like that. Again, talk to a tax advisor, which one's right for you. But the fourth one is looking at investment losses. Now, I know in 2022, 2023, there were some hits. Now, it's been going great here recently. I think 2022, we took a pretty good hit. You can actually write off a portion of your losses. What? Yeah, if you realize those losses, you can actually write off a portion of those losses. Again, talk to an advisor, but man, what a great way to soften that punch in the gut when you lost part of your IRA or something along those lines. If you realize those losses, right? Not just look at your statement and go, "Dang, I lost." No, you actually have to sell your positions, kind of thing. So, I don't know if you've got anything to add to that, Wendy.
So the investment losses, I don't have a ton invested in things that I can take losses on at the moment, but I was with
Love those protected asset classes. Sorry.
I was with on a tax call a couple weeks ago, and they were talking about buying businesses. So it's kind of an investment and a business, but buying businesses, you writing off the expense of that business and taking a loss in your overall. I don't know all the details, but it was really fascinating. So these super wealthy people are actually buying and selling business regularly because of the tax benefits that come with that. So something to look into too.
There you go. That's the thing, folks. You've got to stop playing the game by the same old rules that they didn't teach us in school, right? Typically we graduate, maybe you went on to college, maybe you get that magical job, and you look at it like, oh, okay, well, this is what we do. I put money in my 401k and I get a W-2, and oh, taxes suck. Well, it is what it is. It doesn't have to be that way. Figure out what wealthy people are doing. And that's what we're trying to teach you on Money Moves. This is our 135th video. And I think it's, with the podcast thing, I think we're on episode like 6 or 7 now. But we got a whole library of information. You want more information, go to blackswanmoney.com. But this is the stuff that we're teaching. And so, again, look at how do I realize those investment losses? And, don't take the loss and then go ask the questions. Talk with your tax advisor, figure out a strategy. That's what they should be helping you with. Yeah. And then lastly, number 5 is really looking at the secret that's out there. And again, I just found out about this a few years ago, is the HSA, the health savings account.
Yep.
There's a whole lot you can do with that. We're not going to go into that today, but from a tax perspective, these are pre-tax dollars you can set up. And I know some companies offer an HSA, right? I know it wasn't my last employer, but a couple of employers before that had an HSA program that you could participate in. But especially if you're self-employed, and I think you have to have a insurance plan that's classified as high cost. Again, talk to your tax advisor, but there is some stuff that you can do there that's huge. Yeah. Not to mention the money you put in there are pre-tax dollars. You're going to go to the doctor, especially if you've got kids, you got checkup, wellness checks, things like that. If you've got health issues, you pretty much know your routine on what's going to happen. So these are monies that you can remove, if you will, air quotes, from your taxable income. So you don't pay taxes. That may even lower you depending on what you're spending and where your threshold's at. That may even lower your tax bracket, so to speak, right. And enable you to save more money.
Yeah. Yeah. I had there's HSA, and then there's something else sometimes with businesses. I used to have one, and I loved it. But yeah, I just read in a book a couple of months ago about the HSA and all the benefits as a self-employed. So that's something I'm currently looking into to get set up for myself as well, because you have those expenses regardless. There's so many things that can actually count towards an HSA legally that we do all the time.
Well, and that's the thing, folks. It's about, number one, educating yourself, right? Number two, it's about, getting the good advice, right? Like what we're doing today, we're just bringing up the question. We're planting the seeds, so to speak. But don't just stop there. Now what you want to do, especially because you're going to be talking to your tax person anyway, right? Make sure you've got a good tax advisor, not a tax preparer. But the tax preparer may know some stuff too, but I doubt they bring it up unless you ask the question. So ask these questions. Hey, what could I be doing? What about this? What about this? What about this? And that's actually, I'm going back several years though. I used to use a company, one of those big box tax preparer companies. And I started asking these questions. And when they started responding back with, oh, that's a good idea, I never thought about that. That's when I started to realize, hey, I probably need to upgrade who's doing my taxes. I've never been one that trusted the softwares, and do it myself. I'm like, okay, I want to know. I want some, because they're literally going to mean the difference between thousands of dollars to your bottom line. So don't go cheap, and you know what I'm talking about. Okay, you can pay a little bit more now and get good advice, good product, or whatever the case may be, or you can go cheap and you're going to end up paying a lot more for it down the road. And so kind of have that mindset, not that you need to go all out and, go the highest end, but get somebody who's got good backgrounds, got a good business mind, and is giving you tax advice, not just preparing your taxes for the government. They're either working for you or the IRS. Which one, right? Pick the one you want to work with. But just to recap, number one, look for those tax credits out there, even if it's just a simple Google search. Single person tax credits available, family of 4 tax credits available, whatever the case may be, and start there. Number two, the business write-off. Start a small business. And I don't want to start a business. Okay, fine. Go plug into something that's already plug and play. There are a lot of different businesses out there. We even have a fantastic affiliate program, minimal time investment, things like that. If you want more information, reach out to us or get plugged into. There's network marketing out there, all kinds of things going on. There's a lot of different people on, TikTok and on Instagram where they're talking about work from home. Start a small business that way in your spare time, but start a business, get those write-offs. Number three is once your business takes off a little bit, look at your business structure. Don't just stop there. Look at that business structure, what's available. Investment losses. Yeah, it's spilled milk and it sucks, but hey, there's a little bit you can recoup. Okay. Again, talk to your tax advisor. I've got some investment losses. How can I capitalize on that? Okay. And then lastly is that HOA, and there's some powerful stuff in there. We'll do a whole episode on those. But man, is there a ton you can do. Again, you got to qualify for them, but if you can get in that door, there's a lot you can do, not only for your health expenses for the coming year, but I'm talking like health experiences down the road or health needs down the road. Like start saving now for your health costs in retirement. Start leveraging growth in that protected account to leverage for your retirement with tax-free dollars, tax-deferred dollars, right? It's pretty powerful stuff. So definitely worth a look into. So again, folks, just like your debt, you can control your expenses when it comes to taxes too. So don't let April 15th be too frustrating for you. And 2023 is pretty well over as far as the advantages you can get in there. But hey, don't let the same thing happen to you for 2024 next April, right?
Right. Good stuff.
All right. Yep. All right, everybody. Hopefully that was helpful to you. If it was, please show some love. Help us with the algorithms. Click that little subscribe button. Make sure you're subscribing to us on your podcast platform. Give us some love on YouTube. Share this. These videos are available. We're posting them on multiple channels. So share them with your friends, family, and on your social media. We would greatly appreciate it. And again, don't be afraid to make money moves for you and your family to create a better life financially.